I think we are live. Hopefully people can see us now on LinkedIn. I'm Ryan DeRusso, fee only financial planner with United Financial Planning and Thinking Cap Financial, and I'm with Andrea Rotondo. I hope I said that right. I actually didn't ask you how to
Yes,
pronounce the last name.
you did,
With
Andrea Rotundo.
Yeah, a bookkeeper with Liquid Sense of her own creation. So I'm really excited. This is our first LinkedIn Live. So hopefully you all can get something out of this. We'll also be recording it. So we're going to post it later, hopefully. So very excited to be here. We wanted to talk about an issue I know people hear a lot about, which is the S Corp, whether to opt in or not. And, as we get into this, Andrea, we have to start with these. We have to start with the qualifications. This is not individual tax advice. This is not individual financial advice. This is just general sort of understanding what the S Corp is, the upsides, the downsides, and whatnot.
Yeah, absolutely. Please just take notes on what we're saying. If any question comes up, write it down. And I really strongly suggest that this would motivate you to ask questions, like I said, and to reach out to your accountant or look for an accountant to really put this into practice and how these would play out in your own business.
Absolutely. Yeah. So it's the question of an S Corp something that comes up quite a bit with you and your clients, Andrea?
Yeah, absolutely. And what I find really, I can't say if it's unique to this industry, but I'm often in spaces where therapists are talking, for example, Facebook groups or here on LinkedIn, and new therapy practice owners are asking questions to their colleagues and other therapy practice owners. And
Mhm.
it's really common to see just people thrown out like, just, hey, just do the S Corp, just go for the S Corp, just sign up. My accountant told me to go for the S Corp. It's just really common to see that.
Mhm.
And on the other side, I've also seen people say, like, if somebody asks the person that said that gave that advice, like, why do you say that? Typically the main answer is because it saves me on taxes, but that's because my accountant told me. And there's
Right.
not a lot of knowledge around it. There's not a lot of understanding when it comes to it. It's just more, well, my accountant told me, so therefore here I am, and whatever they tell me I do. And I think that there's a big gap.
Yeah.
And sure, you can take advantage of that, but we're having this conversation because we want you to be informed and to really step in and look at all the pieces that involves this, and also for you to have a clear picture of why this is useful for you, why is it not, maybe this is not the time for it,
Mhm.
and also that you're clear on what's expected of you if you choose to be in that space.
Yeah, it's true. Like people talk about it, and I think they hear it like on a podcast in particular. I know I always hear it there too. So it's definitely an easy sort of 1-2 thing that you can sort of promote and
Right.
say on like outlets and whatnot. But a lot of people don't even actually know what it means. So let me give a quick explanation. And also, by the way, if you have any questions or anything, please put them in the comments. We're going to be looking there, and we'll try to get to them at the end. We want this to be a very quick thing. We'll try to get in and out, but if you have any questions, please put them there. In terms of what the S Corp is, I'll just give the quick explanation. Is it's a way to kind of cut what you're declaring to taxes in a way that reduces your taxes. So you're creating two buckets. You're creating a bucket for salary, and you're creating a bucket for distributions, because as a business owner, you are two people. You are both an employee of the business and the owner of the business. And then you get a salary for being the employee of the business, and you get a distribution for being the owner of the business. And what that does is the salary, you have to pay what's called Social Security and Medicare tax. When you're self-employed, it's called the self-employment tax. It's 15.3%. So anything you make on the salary, you pay 15.3% on top of your regular income tax. Um, every employee pays that. That is what every employee pays. It's just when you're in an office somewhere getting a regular salary, your employer is paying half of that amount. And so that's why it doesn't seem as impactful. But when you're self-employed, that's not the case. You're the employer, you're paying the other half of the amount. Now, the distribution, or what you're receiving as the business owner, you don't have to pay that 15.3%. And so it can become, but that's really valuable. I mean, that's great. You're like saving 15.3% on potential like significant amount of money, but it's really what I find really good for those businesses that have profits beyond salary, that are growing and are going to continue to be bigger down the line, because the bigger you are, the more impactful the design can be.
Yeah, absolutely. And I think you nailed it when you mentioned the word profit. There's a lot of, like I mentioned, people giving that advice to their colleagues and their friends, saying to do it from the beginning when you're not really certain of how much money you're going to make.
Right.
However, the benefit of that is really in the higher profit. So the more profit that you're making, the more savings you'll have. But you want to make sure that you're profitable. And I would say another aspect of it is the S Corp is a tax election. This is not a tax or a business entity. So even before you're able to jump into having the S Corp or choosing this as your tax election, you have to have a business entity in place. So it's kind of like you're getting started. The baby, everybody talks about their business as their baby. And now your baby is a kid and it's growing up, and now you're finally in the adult stage of your business. And therefore, you are kind of like held to a higher standard, or your responsibilities are greater, and you can have other freedoms and other things that you get to enjoy because you're older, but also, like I said, you have other responsibilities to take care of.
Yeah, and someone might come by and say, "Yeah, well, what's the big deal? I mean, I can opt in, just take the salary, and then worry about the distributions later. But at least I can take some advantage of it now." Why wouldn't someone want to do that? Do you have any thoughts there?
Yeah. Well, I would say, first of all, we want you to be clear on your profit and run numbers, not just say, yes, I am profitable because, I pay myself and I can pay my bills every month. But we want you to be really short and clear on what your profit is, as well as, are you expecting that to either grow or stay on that same level of profitability so that you can sustain that? But also, are you going to be able to keep up with all of the requirements? Like I said, all of those responsibilities. For example, now when you're talking about salary, it's not just the distributions or the draws that you're taking, but now you're paying yourself through payroll. So now you have to have a payroll company. I really recommend people to, at least from the beginning or to get it set up, to really work with a professional in that aspect instead of just signing up for something that kind of like you DIY it, especially with payroll. I don't want you to DIY it. There's so many factors in it. And because it's something so detailed, most likely you're not going to know what it is. You're not going to know where to sign up and where to pay and when to pay it. So I strongly recommend that you work with somebody, again, at least in the beginning. But also, like I said, you're going to have all of these payroll liabilities. You're going to have a different tax form, which also is now a whole month before. So your tax,
Early,
it's not going to be in April. It's going to be due in March.
And there's penalties if you don't file on time. So that also
Yes.
adds to the mix.
Your records are also going to be important. So if up to now you kind of have been winging it and just sending your statements to your accountant and they just kind of figure it out for your Schedule C, that's going to be a thing of the past. We want you to have clear records month to month. We want you to, not only for the sake of having records, but now that you're on a higher level, now you have an S Corp, we want you to be more informed with the finances and how you're managing your business. So it's important for you to keep track of your records, have some sort of system like a QuickBooks Zero, any sort of software like that, but also include yourself in that process. Look at your profit, look at your reports, get involved in that. What else am I missing? What other requirements? The payroll liabilities, your tax return changes, your bookkeeping is going to be different, more robust. You can also throw in benefits in there, but that's a deeper layer of it.
Yeah. And I would also add that just general like tax filing is going to be a lot more complicated and more expensive.
Yes.
A
Yes.
CPA is going to charge you almost double, typically, or at least a third to a double
Yeah.
the amount that they're going to charge for just a regular filing. And that
Yeah.
could go up depending on how complex your S Corp is. And so you don't want to just throw extra costs to the mix for no purpose, right? So it becomes
Yeah.
valuable when you can actually take advantage of those tax advantages. But if you're not taking advantage of them, then it's just a lot more headache and not worth
Right.
the trouble. And you also don't want to be in a situation where you're 1 year opting into the S corp, the next year reverting back to an LLC, and vice
Yeah.
versa. Going back and forth. One, because the IRS could be like, "What the heck is going on here?" And
Right.
two, that's just adding a whole other layer of headaches to what is already probably a very busy schedule for you.
Yes,
Yeah,
and we're definitely not trying to persuade you to stay away from it. We
yeah,
both understand that this is a really awesome tool if it's the right moment for you. So, for example, when we were talking about profitability, if after you run your numbers, the benefit of implementing this gives you, let's say, $1,000, that you're saving $1,000 or $2,000 or even $3,000 in that year, you might end up have like all the payroll costs, the bookkeeping costs, the filing the taxes. It's probably going to be greater than that. So going through all that process to at the end of the day stay at the same place, like just going back to the same place as if you were
mhm,
filing with a Schedule C, it might be that maybe that's not the year that you want to start that.
right. And it really depends. As we said, you have to talk to your people, but I really like it for those companies who already have that in place. So they're already spending for things like that, and
Yeah.
all they need to do is then add in the S corp, and which means like an extra fee come tax filing time, and it can be really
Yeah.
valuable for that, especially if they're growing. If they're doing all this but not growing, well, that maybe it's not the purpose. But if they're really growing fast, then that's a really good time to be looking into that, at least considering it. And right now, really, all we're talking about is considering it because the deadline to file was 10 days ago, and so like you can't necessarily file yet, although there are ways to tell the IRS, hey, didn't know, I would like to do it. So you're not like totally unable to do it for this year still. But I
Yeah.
think we were talking earlier, Andrea, and you had mentioned like this is great because it's perfect time for you to actually dig into this and figure out if it's something that you want to do.
Yeah, absolutely. I think that if you guys are here and you're watching and you're interested in an S corp, there's something, either you heard it somebody say it or you have been looking at your numbers. Maybe you're working with a bookkeeper or an accountant. And I would say if you think that this is, or you're approaching that moment that you say, finally, I'm here, I can do this. Take this time to get ready for it and prepare your systems, prepare your team if you have a team. Uh, Take time to find an accountant that you feel this is a person that's going to help me do this. If you don't have somebody already that you can rely on that, somebody that you can ask questions that they're going to answer. One of the things that you mentioned, Ryan, is because um, filing an S corp, like the tax return, costs a lot more. There's a lot
Mhm.
of accountants that could just say, "Go for it, we'll do it," and they don't really give you a lot of information, but it's beneficial for them because they're going to charge you more.
Yes, that is a
So
fact.
it's, I'm not trying to, be negative, but it's the truth. So I want you to be able to work with somebody that you feel like it's a positive relationship for the both of you,
Hmm.
that you are able to ask questions and get those answers and that you're clear on that. So take this time, like Ryan said, the deadline to file was March 15. So take this year, set up your systems, find a team that's going to help you get there, find the tools that are going to help you get there. It's kind of like when you were a sole prop and you had your, you were DIYing and you had this and you had that. That was great for that stage. But now that you're looking to grow, or that you are growing and you're expecting that benefit of the saving taxes with an S corp, now you're going to find that you're in a new level. So that new level requires different tools and could potentially also require new people. So this
Yeah.
is a time to do that before, ahead of time, when you're ready. And that way, when you are ready and you're already there, it's a very easy and seamless transition rather than doing it all at once. It's going to feel very overwhelming.
I would also add, if you are in a partnership, like it's not just you, but it's another
Yeah.
uh, therapist with you, and that organization operates as a PLLC or an LLC, you may want to talk to your accountant about setting up an S corp. So the business is paying the S corp, and then you are then paying yourself through the S corp, because there can be some benefits to that a lot
Yeah.
faster than, say, you're just operating on your own and trying to figure out where the profits are and then deciding the S corp. So, yep.
Yeah. That was a good point.
Yep. Any other questions out there? I'm new to this platform, so that we're using here. So you'll have to let me know maybe after the fact if you have any questions. I'm not seeing anything right now, but we'll make sure to put this up. Andrea, how can people find you if they're interested in connecting after?
Yeah, well, you're watching us here on LinkedIn, and this is one of my favorite spots to hang out. So feel free to just connect. You don't need to add a note or anything, just hit connect. And you're welcome to send me a message, send me a question if you want to. And my website is liquidsensebookkeeping.com.
Yep. And like Andrea said, I'm on link as well. I'm on LinkedIn all the time, so connect with me there. I also have a free ebook that I'm going to be sending out to newsletter subscribers next week.
Nice.
It's about how to turn private practice income into wealth. And so if you are interested in that, you can just sign up for my newsletter at thinkingcapfinancial.com/checklist, and you'll be able to sign up there. But
That's awesome.
Andrea, this was great. Appreciate it. Hopefully we'll do this again.
Yeah, thank you so much. And thank you, everybody, for watching.
Yep. Have a good one.
Bye-bye.